The US dollar has been the primary reserve currency in the globe for a long time. This indicates that a lot of nations have a lot of US dollars on hand to use for international financing and commerce. At one point, China's foreign exchange reserves exceeded $3 trillion, making it one of the biggest holders. China has been making efforts, meanwhile, to decrease its dollar stockpiles in recent years. Are you interested in the potential effects on the US and the global financial system of China's recent sale of US treasuries? We'll examine China's motivations for these moves as well as any possible repercussions for the US dollar's standing as the global reserve currency in this video. So fasten your seatbelts and get set to discover the most recent happenings in the ongoing US-China economic rivalry. China now has the least amount of US treasuries it has in 12 years. It seems to be a calculated strategy to undermine the US dollar's hegemony in the global economy. With growing strains between the US and China, China is purposely reducing its government bond holdings to counter dollar hegemony. China made the decision to reduce its dollar reserves due to a number of other issues. First, the trade war and other problems have exacerbated the already escalating geopolitical tensions between the US and China. China is also worried that the US would limit its access to the international financial system or freeze its assets as a weapon in these disputes by using its dominance over the currency. Concern over the long-term sustainability of US fiscal and monetary policy, particularly in light of the nation's mounting debt, is another factor. The nation is concerned that the US would experience a debt crisis in the future, which might cause inflation or a significant decline in the US dollar's value. Ultimately, China is attempting to lessen its reliance on the US dollar by internationalizing the renminbi, its own currency. It hopes to see more use of the renminbi in global trade and banking since it views it as a possible competitor to the US dollar as the world's reserve currency. China's US Treasury bond holdings are at their lowest point in 12 years. The Center for International Finance reports that China's holdings of US Treasury bonds are at their lowest point since 2010. China's holdings of US Treasury bonds as of February were $848.8 billion, down from $1.403 trillion as of December 2021. The US-China trade war caused the decrease to begin in 2017, and it has since picked up speed. In February 2022, China's holdings of US Treasury fell by 17.5% from the same month the year before. Therefore, big nations like China, Japan, and Korea sold US Treasury bonds to safeguard their currencies against the strong US dollar brought on by the US Federal Reserve System's strict regulations. Last year, this pattern persisted, sparking a reverse exchange rate war. According to recent reports, as the strength of the US dollar has declined this year, there is less need for central banks to engage in the foreign exchange market. This is because it is anticipated that the interest rate hiking program of the Federal Reserve System would soon come to an end. Consequently, since November of last year, the balance of US Treasury holdings in major nations has resumed its increasing trajectory. The balance of US Treasury assets in 38 different countries has increased, according to Treasury International Capital. The balance increased overall, from $7.1332 trillion in October of last year to $7.3436 trillion in February. China, though, is heading in a different direction than other powerful economies. In an effort to diversify its holdings and internationalize the yuan, the Chinese government is lowering the amount of US dollar assets and government bonds that it owns. As the world economy grows, this position has gained prominence. In the wake of the Russia-Ukraine war last year, supply chains have been reorganized around allies. The impact of this tendency on international markets in the future is uncertain as long as the US dollar maintains its strength. The United States recently tightened its ties with its allies while enforcing sanctions against China, mainly in the semiconductor industry. Experts speculate that China is responding by offloading US Treasury bonds. China is reducing its holdings of US Treasuries to strengthen its long-term economic and financial security, the Chinese state-run media site, the Global Times, said. The nation's central bank, the People's Bank of China, has also pushed for more diversification and lowered the proportion of the US dollar in its foreign exchange reserves. China's foreign exchange reserves were 79% dollar-denominated in 1995. By 2017, that percentage had dropped to 58%, less than the global average of 63%. The People's Bank of China hasn't revealed the dollar's present proportion of foreign exchange reserves since 2017, although many observers think it might have dropped much lower. The International Finance Center claims that China's decrease in its holdings of US Treasury bonds may be connected to the rise in yuan payments that transpired during the conflict between Russia and Ukraine. The cross-border yuan payment system, CIPS, has seen a notable growth in yuan payments as China pushes for yuan internationalization. Actually, From 21.3 trillion yuan in the fourth quarter of 2021 to 26.1 trillion yuan in the same period last year, more money was paid in yuan. Brazil's recent pro-China stance during a summit meeting with China is one prominent illustration of this tendency. The two nations decided to engage in direct financial transactions and extensive trade using their respective currencies, the renminbi and the Brazilian real. Furthermore, a growing preference for the yuan over the US dollar is evident in the announcement made by Brazilian companies that they will be using the cross-border yuan payment system rather than the dollar settlement network, the International Association of Interbank Telecommunications, also known as SWIFT. These changes are indicative of China's attempts to lessen its reliance on the US dollar and diversify its sources of economic and financial strength. China's efforts to promote yuan internationalization are obviously continuing to pick up steam. Attempts to make the Chinese yuan more widely used. Growing economic ties between China and Russia are one reason propelling the renminbi's internationalization. China is currently buying more oil from Russia than it has in the past, and its exports to Russia are rising at a double-digit rate. Due to Western restrictions that prevent them from transacting in dollars, Russian businesses are shifting more of their trade settlement to the renminbi and increasing their borrowing in Chinese yuan. Moscow is accumulating more yuan in its foreign exchange reserves as a result. Russia is now the third largest market for offshore yuan payments, with the yuan accounting for 23% of import settlements in 2023, up from 4% in 2022, according to the country's central bank. This is a big increase considering that, as of the end of 2022, Russia wasn't even among the top 15 nations receiving the most offshore yuan payments. Furthermore, big Russian corporations are currently issuing bonds denominated in yuan. Recently, United Company Rusal International PJSC, an aluminum production firm listed in Moscow and Hong Kong, raised $590 million or 4 billion yuan through the issuance of the first-ever yuan-denominated bonds in Russia. In addition, P.R.O, the largest gold miner in Russia, released bonds denominated in yuan with a 3.8% coupon rate, valued at 4.6 billion yuan, $670 million. P.R.O intends to use the money for investment initiatives and other business needs. Effect on the US dollar over the long run? Concerns about how China's choice to sell US treasuries would affect the US dollar's long-term dominance as the world's reserve currency are mounting. The dollar's hegemony may be weakened if more nations begin to diversify their foreign exchange reserves and cut back on their holdings of US treasuries. The probable depreciation of the dollar may have a significant effect on the world economy. Because of the US dollar's dominance, the US has been able to print money and borrow money at cheap interest rates, which has helped to finance the country's spending. Higher interest rates and inflation in the US, however, might result if the US dollar's hegemony wanes. Additionally, it might result in a change in the balance of power in the world economy as nations like China and Russia gain clout. Given that the US and China have two of the greatest economies in the world, any significant changes to their commercial ties might have an impact on the entire world economy. China's goal to diversify its holdings and make more foreign currency transactions with its own could cause the US to lose ground in the long run in the global power dynamics. What are your thoughts on China, and do you think they can overthrow the US dollar? Let me know down below. If you want to continue to learn about business investing and financial education, we have got this video waiting on the screen for you to check out. Don't forget to give this video a like and subscribe for more videos like this. Thank you so much for watching, and I'll see you in the next one.